Hello and welcome. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me Shel D'Souza. And viewers, in the next 1 hour, we're going to be highlighting all the buzzers in trade right now. We will connect with our team of researchers as well as our technical expert for today. But before that, let's have a quick look what the markets are up to. So Cheryl, markets are holding on to the gains and it's the life insurance counters that are bucking up the trend.
Absolutely. A very good afternoon to you, Shrishti. And the picture from morning till now is only better when you talk about the markets with the smart recovery underway coming in for Nifty Bank. Benchmark indices holding on to those firm gains, as well as let's take a look at what the broader markets are doing, because earlier in the trading session here the broader markets that were tad bit underperforming the benchmark indices. Let's see if the picture is similar. No, there you go. You have the mid cap index now trying to inch higher at the day's highest point coming in for mid cap index. Small cap index also was bucking the trend at that point in time. There you go, 3% uptick coming in for the small cap index. Key to note is the fact that the broader markets as well as Nifty, all three of them are actually trading above their August 2nd closing level. So remember that after August 2nd, we saw the sharp crash, not only in the Indian markets, but global markets as well. From there on, the Indian markets have managed to stage a recovery with the advanced decline ratio at this point in time in the favor of the gainers. So yes, good going coming in for the markets right now, Shrishti.
Well, certainly, but with this, let's move on and let's also highlight the counters that are buzzing in trade right now. But before that, let me welcome Gaurav, who is joining us on the research front, as well as to highlight some of the breakout and the counters that are looking good on the technical setup. Osho Krishan, who is a senior analyst, technical and derivative research at Angel One, is joining us right now. Very good afternoon to both of you and thank you so much for your time. Well, let's kickstart and let me highlight the first counter, and the first stock is IND Bank today, what we wish to highlight, because you will see that the financials are indeed taking up the lead, but IND Bank, look at the move and the gain of more than 2.5% in trade right now, because after the company got the approval for the mutual fund business, Nomura has come out with a very interesting note. They do maintain their neutral rating with a target price of 1,580 rupees. That's almost 200 upside even from the current market price. They are highlighting that the company receives RBI approval to set up AMC subsidiary and can now generate revenues as a manufacturer of mutual funds. That is a positive development at the margin level, but scale will take time. Now, this is the first instance of RBI allowing an existing bank to set up a fresh AMC business as a subsidiary, and hence the gain, the stock holding on to the gains of 2.7%.
Right, and that's all about IND Bank. But earlier in the day, we had a word with Devin Choksi to understand his take coming in for the banking space, especially the ones that are have exposure to the corporate banking side. Listen into what he had to say.
Within the corporate banking space, I think the likes of ICICI Bank, the likes of even for that matter, HDFC Bank and even SBI, we find that I think these are some of the larger companies which are likely to show relatively stronger performance going forward. Currently, they are passing through some kind of price rationalization, stroke valuation corrections, and I believe that that's the time for buying into this kind of companies. Because if we buy the India story, where the size of the economy is being talked about from $4 trillion to $10 trillion over next 8, 10 years and above, in such situation, I think the banks with a stronger balance sheet will be the ones who would be producing relatively steadier and better return on a compounded basis for investors' portfolio. So this opportunity is a welcome opportunity. Market is giving correction in some of these stocks, and this is where probably I think you buy them because fundamentals of this company remain absolutely solid, and that's where I think one would like to I think take the contra call in the portfolio and buy these companies.
All right, moving on then, Osho, coming to you. Apollo Tyres, how is this one looking at the charts right now?
Very good afternoon to all of you. Yes, Apollo Tyres has seen very good movement in today's trading session, especially after consolidation from the past 3 to 4 trading sessions. Especially if we will be seeing, then the counter has seen approximately 100 point of correction from the highs of 570 odd levels and has started gaining traction from a very strong support of 200-day SMA. Even the technical fronts are looking very positive because the counter has already seen in the oversold territory and we are witnessing a kind of reversal in this counter. So I'm expecting that from here onwards, there can be a decent upside move in Apollo Tyre approximately 520 to 535 is the immediate and first target for Apollo Tyre. But the time it breaches the zone of 535, then it can retest the zone of 570 in the near period. So overall, from risk reward point of view, it is placed at a very lucrative level. So one should definitely try to gauge the momentum in the coming period.
All right, that's about Apollo Tyres seeing good momentum in today's trading session. But Cheryl, that's Zomato as well that is in focus today.
Absolutely, Zomato is in focus in today's trading session because late last evening we got information that Anfin Singapore is going to look to sell stake via block deal in Zomato. This morning you got the news that they've upsized the offer. So they've sold now 18.54 crore shares in Zomato via block deal. And also they said that the shares were priced between 257.1 rupees per share, which is a discount of about 1.9% to yesterday's closing price. Remember, Anfin had previously offered about 13.6 crore shares. There is a 90-day lockup on the seller as well as the affiliates, and Goldman Sachs and Morgan Stanley were the placement agents. But who are the buyers in this block deal? We are yet to get that information, but the matter right now trading flat post block deals taking place earlier today.
All right, but speaking of Blinkit then, Pankaj Murarka, who is the CIO of Renaissance Investment Managers, says that they have established their presence in the grocery delivery business. Let's listen in to why he thinks Blinkit has the right to win the battle in this particular space.
In case of Zomato, there is a clear case that Blinkit has established a clear-cut edge in terms of over competition in the quick delivery space. And obviously, India being a very large market where grocery and retail sales are about $800 billion, we can easily accommodate 4 to 5 players. So not everyone is going to win that battle, but Blinkit clearly seems to be one of those which is going to win that battle. Now, if you put that in context and of Blinkit being a leader in the quick commerce and in the grocery segment, then I think the potential value of that business 10 years out can be significantly higher, meaning it could be equivalent of what a DMart or Reliance Retail is or probably will be going forward as well. Because the consumers are pivoting from going to malls to having this luxury of the goods being delivered to them at their home in 20 minutes or 30 minutes. So I think the growth potential is still very, very significant in that sense. And I still think that, there is a long runway for growth for all these businesses. When you talk about Zomato's food delivery business, mind you, their total customer base is just about 4% of India's population. Why can't about 15-20% of India's population be Zomato's customer base? Meaning, possibly over the next 10 years, I think that could be a probability in that sense. And in which case, probably the growth curve for them can be very long.
All right, let's shift focus then from Zomato, from Blinkit. Let's talk about all cargo logistics. And this one is seeing a very good up move in today's trading session. Gaurav, and why is that?
Well, yes. When we talk about Alargo Logistics, this company has come up with strong set of numbers in terms of monthly volumes. Now, the Alargo international supply chain actually reported LCL volumes which came out at 8.1 lakh cubic meters, which is almost near to what they have seen at a record high in August 2022. If we talk about the growth, they have actually reported around 6% month-on-month growth in this month, and the volumes have been steadily increasing on the back of the improved global trade is what the management had said, and they also expect this momentum to remain throughout the year. Apart from that, they have also said that the increasing volumes have witnessed in all major regions like USA, Latin America, Europe and Asia Pacific, and on back of the volume pickup that we have seen, they also believe that the freight rates are also anticipated to stay at a high level. When we talk about container volumes, there also we saw some kind of good momentum. They said that improved utilization is seen in this month of July, and on back of this, if we look at the stock performance also, now the stock is up almost by 9.7%. So definitely watching out on this counter on the back of the healthy numbers that they have reported for July.
All right, then that's about Alargo Logistics seeing stellar gains right now. But Osho, let's talk about Asian Paints then. Given the fall in the crude oil prices in the international market, that must have provided some support to Asian Paints. But how is the technical setup looking like to you?
See, overall, Asian Paint have seen a decent traction in the near period, specifically in the last 2 trading months. There has been a cycle of higher highs, higher lows. So there has been a relief from the corrective phase in Asian Paint. And looking on the technical development, the counter have strongly emerged above all the exponential moving average, specifically the 200-day SMA on the daily time frame. So I'm expecting that from here onwards, there can be a gradual upshift in this counter. On immediate basis, 3170 to 3180 is the target that I'm eyeing for. The time it crosses the zone of 3180, then there can be a strong reversal in this counter for a higher target of nearly 3300, 3350 from short to medium term time frame.
All right, so that's Osho's view coming in on Asian Paints. On that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere.
Welcome back to Market Fatafat, and let's keep it going with all the buzzers in trade right now. And Osho, I'm coming straight to you to have your take on CAMS, because that's the counter that you're tracking. And what I can see is that though the stock is down about 2% in trade right now, but it's been facing some pressure from levels of 4600. How do you see the stock moving?
See, overall CAMS is in a cycle of very higher highs, higher lows kind of a pattern on all the time frames. But looking at the recent development, there has been a very strong upshift in the support base. So previously the support base was approximately around the zone of 38-3900. Now it has turned around towards the zone of 42-50 odd levels. So I'm expecting, as there has been an upshift in the support base, there can be a strong up move in the coming period also. So I'm expecting the time this counter breaches the zone of 46-70 odd levels, then from there onwards, the next potential target for this counter will be 4900 to 4950 in the coming period, and that's too on the short term perspective. So 4250 is the support zone and 4900 is the target that one can eye for a short term perspective.
All right, let's shift focus. Let's talk about Mahindra and Mahindra. In fact, the entire auto pack has been in focus of late, given the fact that what is exactly happening with the inventory at the inventory level. But today you have Citi that's come out with a note on Mahindra and Mahindra where they've slashed the price target for the counter to 3,180 rupees per share from about 3,340 rupees per share. They've cited the risk to company's sports utility vehicles segment. What they're saying that the SUV demand for the company has moderated versus their earlier expectation, even as the company has expanded the capacity significantly. They're saying that they've cut their volume estimates for Mahindra and Mahindra's SUV segment, resulting in slight cut in the earnings estimate as well. What Citi believes is that Mahindra and Mahindra's tractor volumes is likely to benefit from overall improvement in agriculture sector demand, which may help the overall margins. But for the earnings estimate, Citi has cut it by about 3 to 6% while maintaining a buy stance. So yes, a target price cut coming in along with an EPS estimate cut coming in, or rather earnings estimate cut coming in for Mahindra and Mahindra from Citi. The stock is under pressure today.
All right, we're moving on, and Osho, the next stock that you're tracking is Coal India indeed. Almost 0.5% gain, but do you believe that the stock could actually cross its earlier and previous highs of 540 odd levels if you still hold a bullish stance?
Yes, looking at the overall trend, there has been a sloping trend line breakout in this counter, especially in the last trading session. So approximately 518 and 520 was the zone where it has given a very strong breakout. So I'm expecting the trend should continue, the momentum should continue. But again, being a heavyweight, it does not give another 1 to 2% kind of a move in a day. Very rarely it gives more than 2% kind of a move in a day. But I'm expecting on a gradual basis, 535 to 36 should be the target that one can eye for short-term perspective. That is for very positional basis like 4 to 5 trading sessions. And the time it crosses the zone of 535, there can be a strong momentum building in this counter for higher targets of 550 from short-term perspective only.
All right, moving on. Gaurav, let's talk about Nucleus Software. This one is a high flyer in trade today.
Well, yes. When we talk about this company now, this company has hit its upper circuit of around 20%, because the reason being that company is going to hold its meeting on 22nd August to consider the approval of buyback of the shares. Now, when we talk about the history of the company, this will be the third buyback in the recent previous years, because the company had already been showing the same buyback momentum in 2017 and 2021 as well. Now, this buyback could be either done via the tender offer or in the open market route. Earlier, when we talk about the buyback in 2021, we saw this company came up with a buyback offer of around 700 rupees per share. When we talk about the stock performance, actually the stock has corrected from its 52-week high of around 1822 rupees on the back of the weak results that we have seen in Q3 FY24. But post this announcement, again we are seeing some kind of positive momentum coming up in the stock. The stock is currently locked in the upper circuit of 20%.
All right, then moving on, let's put the spotlight on TCS then, because today Macquarie has come out with a note on TCS where they do maintain an outperform rating and have hiked the target price to 5,740 rupees from 4,750 rupees, and that's more than 1,000 rupees upside is what Macquarie is looking at. What they're highlighting is that they found the overall AI demonstration powerful. Serve to remind us that although TCS still spends only 1 to 1.2% of their revenue per year on R&D, it is now a large figure. They do see AI making legacy modernization possible with much greater accuracy and at a lower cost, and see potential for a pickup in demand medium term from a wave of legacy modernization programs. They are adding TCS to the Macquarie Idea list as well, Marquee Ideas list as well, I beg your pardon. And that's Macquarie's take on TCS, the stock holding on to some gains of 0.4%.
All right, let's talk about Geo Financial Services then, Osho. How is this one looking on the charts to you right now? Do you think it's a long-term play? And if it is, do you think now is the right time to look at it?
See, overall in Geo Finance, we have seen a secular downtrend from the zone of 370 towards the zone of 310 approximately. But from 310, when the technical parameters have turned oversold, then from there onwards, we have witnessed a positive crossover on the technical developments only. So now I am expecting that 310 should be acting as a very strong support, and for the first time it is emerging above the previous swing high. So I am expecting now there will be a trend reversal that can be seen for Geo Financials, and from here onwards one can definitely see approximately 355 kind of a target for short-term perspective, and once it breaches the same levels, then 370 will be the next potential target for Geo Finance from it is also from a short-term perspective only.
All right, let's shift focus then and put the spotlight on the cables and the wires companies, especially KEI Industries as well as Polycab, because both of them have got an initiation coverage coming in from UBS, where they've initiated the coverage on KEI Industries with a buy rating, target price of about 6,150 rupees per share. For Polycab, also a buy rating initiation with a target of around 8,550 rupees per share. They're saying that both the companies are a best play on electrification. There is favorable supply-demand dynamics that will in turn actually benefit the industry leaders. They're saying the current $8 billion segment will be worth about $20 billion by FY30, and the market share of the top 5 companies will only rise going forward. What the other important highlight or important point that UBS is highlighting is that the shifting global supply chain and incumbent sizable capacity should lift the export revenues coming in for both of these counters. Therefore, they are seeing a 16% earnings CAGR over FY27, 24-25 for Polycab, while for KEI, they see an earnings CAGR of around 24% over FY24-27. They're also taking the compounding earnings to support the expensive valuation, and also they believe that the consensus has underappreciated the potential ramp-up of the exports. So positive views coming in for both of these counters, and as you can see, they're both holding on to good gains.
All right, great moves on both of these names, especially KEI. But Osho, the next stock that you are focusing on is NTPC. What I can see is that the stock is taking support at its key averages. But how do you see the stock moving ahead, as well as any targets to look out for as well?
See, overall, there has been 2 developments in this counter. First, as you have mentioned, that the counter is taking support from the 21-day exponential moving average. The other one, that it has seen a very strong move from the zone of nearly 360 towards the high zone of 421 odd levels. There it is having a kind of very strong retracement, and from these levels around the zone of 402 to 404 will be acting as a very strong support for the retracement perspective. So I'm expecting that for short-term perspective, definitely there can be a trend reversal in this counter. For immediate targets of again 420 to 22 is the immediate target that I am expecting, but once it breaches the zone of 422, then there can be another 20 odd points of movement can be seen in this counter from short-term time frame.
All right, on that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss on the other side, so don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.